Welcome to session B of basic tax training, dependence and filing status. So excited to have you with us tonight. I'm Holly Daniels, and have the honor of being Prepare and Prosper's Senior Manager of Volunteer Resources. Mostly I'm in charge of training and all of the training materials like the volunteer manuals. And I also get to work with Sarah and Mary to engage you guys better, engage all the volunteers. Um, I am excited to have with us as our trainer tonight, Mike Garmaker. And with that, Mike, would you introduce yourself to us?
Sure thing. So, as Holly said, I'm Mike, and I am one of the many tax site managers. The tax site managers are seasonal part-time staff of Prepare and Prosper, and we make sure that everything at the tax site runs smoothly. For example, helping volunteers when questions come up, making sure that all the processes happen when they're supposed to happen. This is my 11th season of doing this part-time job on top of my full-time job, and I come back year after year because I enjoy it so much. And I think I'm ranked number 2 now in seniority among the tax site managers, tied with Amanda, who Michelle just mentioned. So let's jump in. Tonight we're going to talk about dependence and filing status. If you have any questions, feel free to unmute yourself and ask, or you can pop them in the chat. So who's in the room? We've got brand new volunteers, returning volunteers, we have training assistants, we have site managers like me. We probably have some new tax site managers as well. So returning volunteers, throughout this training, raise your hand to share real life examples. You could also just pop your examples in the chat or unmute yourself and speak up. Try to keep your examples and questions beginner friendly so new volunteers can follow along. Remember, most of the people in this training are brand new to Prepare and Prosper and some returning. Tonight, we are doing Basic B, dependence and filing status. So you already did Basic A, the intro to the tax clinic and intake paperwork. Ahead of you, you've got Basic C, D, and E, and the practice lab. It's a lot of information, and I promise you it's not as bad as you might think. So tonight specifically, we're going to talk about taxpayer interviews, do an introduction to financial services, talk about dependence. We'll have a brief break. We'll do a dependence quiz. Don't worry, it's not like we're grading you. It's really just practice. We'll look at the tax layer practice lab together, and we'll talk about filing status and a filing status quiz. Again, not graded, just for you to practice.
All right,
So,
we are going to do a quick tour for you of the all of the online resources that you have available to you. So where we're trying to go is the training site. And the easiest way to get there, especially from home, is the start at the Prepare and Prosper website. You guys are seeing that, right?
yep.
Okay, okay, good. So what you want to look for is, hang on, there we go. We're looking for training site up here in the top left right corner, training site, and that is going to take you to the volunteer training site. So during the tax season, you're going to find resources in preparers, hybrids, and reviewers. But right now for basic tax training, this is where you're going to find everything that you need for training. So at the top of the site here, we have the volunteer tax manual. And this is the PDF of the book, the volunteer tax manual. I put some hints down here for you. You can hit Control F anytime to search. Maybe you want to search for divorced parents. If you have a situation like that, or maybe you're like, I need to screen someone, and search the screening tool, it's going to take you to the next page. We also have up here a table of contents, if just to make it easier for you to click around. So tonight we're going to be in the filing status section and also dependence. For our returners in the room, I have some new things kind of up top in the what's new on the what's new page. So on the bottom of page 6, we have all of the things that we worked on really updating for this season. So we have We have a new page on taxpayers with disabilities. We have a whole page on filing on behalf of someone, whether it's a living someone or a deceased someone. Those questions come up a lot in clinics. We also have all of the slides for training, and this is also where the recordings of the sessions will go. If you take the sessions out of order, and let's say you're going to miss C, and then show up for D, and maybe you'll come back later for C. I have a video here on the things that we're going to be entering into TaxSlayer for session C. So that's going to be things for our practice customer here, Tina Parker. And then at the bottom of this page, we have information on how to get certified. So this is links to some information here on the tests, links to the certification to cite, and instructions for you. One more thing I want to show you. If we're back on this home page, we clicked basic tax training. During the regular season, you're going to be in this one a lot more, preparing and reviewing. What you're going to find here is like all of the tax tips that we have. Oh, hang on, I need to let someone else in. I hear you knocking. Here we go. This is where our tax tips are going to be. We have all the past year tax manuals. So if someone comes in and you need to do taxes for 2024, but you don't have that information at your fingertips, you're going to find that down there. We also have, some of you I know are very detail oriented, and you're going to find things that are wrong in the manual. And we love that, even though it's heartbreaking. And I have a little document here called Known Errors in the Prepare and Prosper manuals. And so this is where you can find everything that has been discovered that is wrong since it was printed. For example, on page 94, it should say that the business mileage is 70 cents, not 67. So nothing huge so far, but just so you guys know, there is a place where we are documenting things that are wrong in the manual. So you can go there and find out what's been updated, or if you find something that's wrong, go there first and see if someone beat you to it. So thanks, friends, for following me through this little tour of our resources. So tonight we are in basic tax training, and I'm going to be sharing all the links as well if you don't want to follow along from the training site. Questions, thoughts, feelings?
Holly, have the volunteers already picked up their paper copies, like the paper copy of the volunteer manual and the
I'm guessing
publications?
that most of you have not.
Okay.
Is that right? I believe that today or very soon, Sarah is sending an email saying that you're totally welcome to come this Saturday and pick up your materials. If you're not available to do that this Saturday to pick up your training bag and your manuals and such, then email volunteer at Prepare and Prosper, and you can set up a different time to pick up your materials. Like worst case scenario, you could receive them when you come for site orientation on Thursday, January 22nd, which is one of your bingo squares on the back of the tax manual this year. We have a fun little like volunteer engagement bingo. Things like help a customer get the K-12 education credit, work on a return of someone who shares your birthday, and attend tax site orientation on January 22nd. And if you get a bingo, we'll send you a cool sticker. Thanks for your reactions,
Nice.
friends. It means a lot. All right, Mike, back to you.
Alrighty. So we will go back to, here we go. You see the presentation? Nope, not yet. Now I bet you do.
Here we go.
Okay. So taxpayer interview. This is the basis for an accurate return. Here's a quick recap from session A, the training session you just did before this one. How to do the interview with the customer. So first, you will introduce yourself, ask an opening question. Go over the process with the customer. It's really helpful if you explain the entire process, not just the part where you do the tax preparation, but to let them know that they have to wait after the tax return is prepared, for example, for the quality review, and that the reviewer might ask them questions to clarify.
Mike, can we, regarding that step one, ask an opening question, can we hear from some returners in the room? What question do they like to kick off the conversation, or what questions have worked well for them? Put it in the chat or say it out loud. What question do you like to open the conversation with a customer?
Well, I work at the Veep site in Bloomington, which isn't always easy to find. So sometimes I ask, did you find the site all right?
It's a good one. Did you find us all right? That's a classic, Kate. Is this your first time coming to Prepare and Prosper? I heard a good one recently. Is there anything you're concerned about with your taxes before we get started? Or is there anything you want me to know about your last year before we start on your taxes? Okay. Thanks for that little pit stop, Mike.
Sure. Okay, so we introduce ourselves, ask an opening question. You go over the process with the customer, go over their intake paperwork and review the documents that they brought with them. Conduct the taxpayer interview using the paperwork. And finally, start entering data into TaxSlayer. The point here, and the reason number 4 is in bold, is that you want to go through all the paperwork before you start doing anything in TaxSlayer. TaxSlayer being the software, of course, that we do all the data entry and tax calculations. And number 6, after you prepare the tax return and you're ready to send it to review, you will share the amount of the refund or balances due with the customer. And you probably want to clarify that these are preliminary numbers. The tax returns do need to go through the quality review process. Okay, you'll notice here on this slide and the other slides as we go, in this top right corner, you're going to see page numbers. These refer to page numbers in the volunteer manual. So as we go through these slides, you'll know if you have your volunteer manual, either the electronic copy or the paper copy, you can follow along in that volunteer manual so you know where we are in the manual. So the intake paperwork. The intake paperwork is the main tool for the taxpayer interview. It serves as a conversation guide and roadmap. If it's not complete, you'll help the customer finish it. Spoiler alert, you're going to work with a lot of customers who haven't had a chance to finish all the paperwork by the time they come to sit with you. So you'll be helping a lot of customers finish the paperwork. You'll verify all of their answers, and you're going to listen for things that are out of scope or that require advanced certification if you're not certified advanced. These 3 documents listed, these images here in the bottom right corner show the 3 different sets of paperwork that the customers work on. This yellow one is the IRS paperwork, Form 13614-C. This gray one is Prepare and Prosper's intake paperwork. And this third one, the green one, is also Prepare and Prosper's, and this is the financial services form. Here are some tips for communicating. Talk in plain language and simplify tax questions. Keep in mind that most of our customers don't have a lot of knowledge about taxes. So some terminology like deductions, subtractions, etc., can be confusing if people aren't familiar with that terminology. So try to keep it simple. Listen carefully to their responses. One thing you'll want to do is when you're listening to what they say, think about implications of what their answers are, because that might prompt you to ask more questions to clarify. Explain why personal information is needed. Preparing people's tax returns can be very personal. We ask a lot of questions about them and their lives. Here are some examples of phrases that you could use, such as, I'm asking about when you got divorced to figure out the best filing status for you. I'm asking who provides support for your mother so we can determine if she qualifies as your dependent. I'm asking what you donated last year because there's a Minnesota credit if you gave more than $500. You'll recap the conversation before you start entering any data in TaxSlayer so that the customer knows what's happening.
I've also
Random,
heard it's, sorry to interrupt you, Mike.
go ahead.
I've also heard the tip of and I'd love to hear returners if you have examples of this, of just telling the customer, like, okay, great. Thank you for answering all my questions. Now I'm going to start entering your information into our software. And even just to say, like, okay, now I'm entering your W-2, because it can be a long time of them just sitting there and you're just kind of quietly working. So it's kind of nice to tell them what you're doing and where you're at in the process.
I love that idea.
Also nice to tell them that they can go to the bathroom anytime. Like if they need the restroom, um, they're welcome to go, or remind them about snacks. I've even heard of preparers just going to get like a cup of water for a customer at the beginning of sitting down with them. So think about those things. They might not know that they're allowed to like leave and go get a snack or go use the restroom.
Definitely. Okay, we are on page 48 of the volunteer manual, random interview tip, disability question. So on the IRS intake paperwork, you'll see there are two questions blown up here, legally blind and totally and permanently disabled. Customers often get confused about this question, which asks if they're totally and permanently disabled. In most cases, they're considered disabled if they receive disability benefits. If not, you can refer to the volunteer manual, page 48, for more details. Interpreter conversations. So you may work with customers who have an interpreter. In fact, it's very likely you'll work with a customer who has an interpreter. And that would be if the customer's primary language is not English or if they're deaf or hard of hearing. So some good practices for interpreter conversations. Talk to the customer, not to the interpreter. It's really tempting to want to turn to the interpreter and say, ask him if, or tell her that. Nope. You actually will look directly at the customer and speak to the customer as if the customer can understand you. Then allow the interpreter to repeat what you said. The customer will then answer in their language and the interpreter will repeat again. So remember, look at the customer. You want to speak in short, clear chunks. It's a lot for the interpreter to remember and then interpret. So it's best if you don't give too much information at once so that the interpreter can remember everything and make sure to interpret it. And check for understanding often. You can ask simple questions like, does that make sense? Do you have questions about that? And tips for customers with disabilities. Always ask before assisting someone and wait until the offer is accepted. Then, when the customer does accept your offer, ask them for instructions on how you can assist them. You don't want to make assumptions about how people should or shouldn't be assisted or want to be assisted because different customers have different preferences.
Yeah, and this started with the idea of like never pushing someone's wheelchair without them asking you to, or never like touch someone's walker, or just always ask for permission and ask, can I assist you? And then they'll tell you how they want help or not.
Yep. And if they don't, just ask, how can I best help you? Okay. Intro to P&P Financial Services. Holly, are you taking this one?
Yeah.
Okay.
Oh, would you keep sharing the slides, Mike,
Oh,
though?
sure can.
And I'll just say, all right, when it's time to move to the next slide.
Okay.
All right.
Okay.
Okay, friends. So we have the green form, the financial services form, and this is if you have the PDF of the manual pulled up, it is page 200. And also, if you are looking at my first link here in the chat, it is the last page at the end of this link. Last page, the last form. The green form is usually at the end of the stack of documents. And I would love to have you just kind of spend, let's say, 2 minutes just familiarizing yourself with what is on the first page of this form. So if you are in the manual, Mike, do you actually want to pull up?
Sure.
It's page 200 of the manual, and then we can spend our 2 minutes just so people know that they're looking at the right thing. Here we go. And if you zoom in a little bit. Cool. So let's just spend a couple minutes, like just familiarizing yourself with this form. And I'd love you to come up with one thing you want to learn more about after the 2 minutes. Okay, everybody. That was not quite 2 minutes, just about. Oh, there, my timer goes off. Would love to have you pop in the chat, like what's one thing you want to learn more about as you are familiarizing yourself with this form. And we can go back to the slides, Mike. Thank you. What's one thing that as you're looking at this form, maybe you're new to Prepare and Prosper's financial services, or maybe you're returning from a previous year. What's one thing that you're curious about? Olivia, are the brochures we hand them at the table? I'm going to share more about that in a moment, but generally, you don't have any brochures that you need to hand out. Ooh, Kate, we're going to talk all about prepaid debit cards. I'm glad you brought up that one. Who's providing financial services? Yep, that's totally going to come up. Jacob, I thought FAIR was going away. Oh, yes. Thank you for that note, Jacob. If you looked at the version in your manual, it probably references FAIR. And since the manual went to print in November, there was quite a change there. So sorry that the copy in your book is slightly out of date, but take a look at the version in the last link I put in the chat. That's the version that uses the new language. Who fills out the office use only section? Thanks for that question, Myrtle. Okay, I appreciate you guys getting curious and quizzical as you're looking at this form. Let's talk about it. All right, we'll move to the next slide. Okay, so first I want to talk about just like the buckets of financial services. And my preamble is that CSVs, customer support volunteers, are the experts in the financial services. That's part of their role. So you all aren't expected to be experts in the financial services, but there's some things we want you to know. So first of all, we want you to know that 3 of our financial services happen during the appointment. They happen right now if the customer is interested in them. So we have customers can enter the Save and Win contest. They make that choice when they're sitting with the preparer. They can also change their mind and make that choice after they're done with the prepare, but that would take a little bit of work with the reviewer to enter the contest. They can sign up for a a prepaid debit card from CFR, which stands for Community Financial Resources. So they can get a prepaid debit card right now for their refund, or they can order a credit report. And we can pull that in the clinic right now if they want. There's another way it works where they take care of it afterward. So just so you know, there's like this bucket of things they can choose right now. All right. And most of our financial services are referrals that happen after their appointment. So maybe they're interested in Money Mentors financial coaching, which, by the way, we are about to start recruiting for our next group of financial coaches. There is an application process. So in a couple weeks, you're going to hear from us that, hey, we're looking for people to apply to be coaches. And what we're really looking for, especially, is people who speak English and one other language, or more English plus, and also people who've just been through a hard financial thing. We generally find that good coaches have that empathy built in because they've had a hard financial experience in their life. So just a side note on that, keep your ears perked if you're curious about being a financial coach. We're going to start asking for people to apply in a couple weeks. Also, customers can get referrals to financial planning if they are interested in like retirement savings or starting a education savings account for a kid or grandkid. They could get referred to Lutheran Social Services, who gives support for things like first-time home buying or debt management. Or they could get referrals to Exodus Lending, who help with predatory loans. And a predatory loan is defined as a loan with an interest of 36% or more. Or they could get connected with College Bound St. Paul. We'll talk more about that in, I think, session D. So the point here is like, there's the 3 that can happen in the clinic, and there's more referrals that can happen afterward. Who remembers, who can put in the chat, what are the 3 that can happen right now in the clinic? Who remembers what they are, even just one of them? Pop it in the chat if you remember. Okay, thanks, Chris. Quick on the draw. Yeah, they can pull a credit report right now. A CSV can pull a credit report for them. They can enter, you're so close, Tanisha, they can enter the Save and Win contest. And yep, great job, Lee and Chris. They can sign up for a CFR prepaid debit card right now. Okay, appreciate you guys. All right. So here's what preparers need to know about the green form, the financial services form. This is different than previous years if you are a returner. We are asking all preparers to kind of address these top 2 questions on the financial services form with a customer pretty early on in your appointment with them. So the first question would be at the top, if you're interested in receiving, or if you're receiving a refund, are you interested in saving at least $50 from your refund to win a chance to, for a chance to win $100? Like, did you notice the Save and Win contest? Do you want to save at least $50 for a chance to win 100? Are you interested in this? Basically just like, interested, yes or no? And then if they do not have direct deposit, you need to ask them, are you interested in direct deposit? We can open a prepaid debit card for you right now. So does this make sense, preparers? I'm looking for check for understanding. We want you to, at the very beginning of your appointment, ask these 2 questions of all customers. Okay, Stan is nodding. He's my avatar for, yes, this makes some degree of, whoa, I love the thumbs up. Thanks, y'all. All right, moving on to some animations on this slide. So after you've asked these top 2 questions, you're going to ask them, great, take a look at the rest of this form. And there's a chance here to, like, I invite you to reflect on your financial situation and just check if you're interested in anything else here. And interested especially in any of the free financial services. Everything on the form is free. It's nice to emphasize the word free because for customers, this can feel like we're trying to upsell them, because a lot of customers are thinking, oh, there must be a catch. If you're going to do free taxes, surely you're going to sell me something at this point. And so we just want to emphasize these are free financial services that are available if they're interested. So another thing that's new, you're going to ask them the top 2 questions, and then you're going to prompt them to check out the rest of the form. And You are going to, as soon as they have looked at it, bring this form physically to the CSV station. And I think some sites already do this. I think Merrick has had this as a process, but we're instituting this all sites. The preparer's job is to stand up and bring this green form after the customer has checked if they're interested in anything or not. Even if they're not interested, you're going to bring the form to the CSV station. The point of that is so that CSVs have as much time as possible to act on whatever the customer is interested in, or just circle back to the customer and say, like, I just want to check, you marked no, but are there any other financial services that we would like us to provide in the future? So CSVs are this year being trained to like try and have a conversation with every customer if they're open to it. And this form is the conversation starter. So thank you in advance for bringing this form as early as you can to the CSV station, and then just tell the customer, after we're done, you're going to have a chance to connect with a CSV, or you can, I don't even know if it makes sense to refer to them as CSVs to customers, because customers don't know what that is. A customer support volunteer. If you have any questions or if you want to talk about any of the free services. So that's what we got for the preparer role. All right. So the CSVs are the experts on the financial services. You all don't have to keep track of what are all the different financial services. That's not part of your role, but you do need to get the form to the CSVs as early as possible so that CSVs can do their work of trying to connect with every customer. Sometimes, depending on the CSV and the site, sometimes CSVs might ask if they can talk to the customer kind of during one of those natural pause times where you are, for example, entering a W-2 in TaxSlayer. Not when you're having an active conversation with the customer, but when you're doing the quiet kind of data entry part, you might have a CSV come up and ask if they can chat with the customer about what they put on the form. So we hope that you will have grace for that and be flexible with that. Most often, we think that this happens right after tax preparation. So when you're kind of sending the customer back to the waiting area, you could say, this is your chance to talk to a customer support volunteer. If you're interested in any financial services, or if you have any other questions, or someone's going to circle back with you if you marked that you were interested in anything on the form. And then CSVs make sure that loop gets closed when they check out the customer. All right. Curious if we have questions, thoughts, reactions about the preparer process and what we want you to do with the green form.
I'll insert my opinion, and I think that
Please,
that's a
Mike.
really
Yeah.
good idea. Because what happens a lot of times otherwise is the financial services form, the preparer often ends up holding on to it and then sending it back with the tax return for review, and then it just sits there waiting for review. And then by the time the reviewer gets to it, then they find the way to get that form back to the CSVs. But all that time like was lost. And if the CSVs are
Yes.
busy with other customers, having conversations about financial services or doing checkouts, it's really a missed opportunity. So I think this is a wonderful idea to
Yeah.
have the preparers deliver the form to the CSVs immediately.
Thanks, Mike.
Mhm.
Folks, we're all about continuous improvement around here. So if during the tax season, you have ideas for how we can make these processes better, especially around how to like connect customers with stuff that they might be interested in, please let us know. We want to hear your ideas, or even if you just want to let us know about pain points. That is a less fun email to get than I have a good idea, but we still want to hear what you think. So we're going to survey you a couple times during the tax season, but anytime, you're totally welcome and invited to email volunteer at Prepare and Prosper with your ideas and feelings about the processes. Okay, let's kind of shift gears here. We're going to talk about a big change that we have this year. The federal government is phasing out paper refund checks as of last September. Technically, this checks for tax refunds are still an option in TaxSlayer. Technically, customers can still choose to receive their refund via check, but it's going to take a really long time. We think the process might look like the IRS will send a letter to the customer saying, "Did you mean to give us your direct deposit information?" And the customer is going to have to respond and either say, I don't have a bank account, I don't have direct deposit. It's going to lead to a back and forth with the IRS and be a long delay. So we are going to put more guidance out as we get closer to the tax season. Oh, just like my final point here on the slide. But in the meantime, you need to know that this is going to be a big change for people. It was about 10% of our customers last season who opted for paper checks. Direct deposit has always been a better, faster, more secure option. And so we're going to talk a little bit more about what the direct deposit option is for this year. And Minnesota Revenue is still doing paper checks. So preparers can, you can choose a direct deposit option for the federal refund, and you can choose a different option for the Minnesota refund to receive a check that way. All right. So what we have for people to have a direct deposit option right now is the CFR prepaid debit card. So what the slide is saying, like most taxpayers already have an account they want to use for direct deposit, but we can open CFR cards for those who don't. This is something that the CSVs can kick off. It takes less than 5 minutes to set it up. And save the date. We're going to do a special training on February 2nd, 2/2, about on CFR prepaid debit cards. And we're going to invite all volunteers, and preparers are welcome to come and kind of like get CFR certified to be able to open these accounts for customers as well as the CSVs do. It even in some ways makes more sense for preparers to be setting up those accounts because you're already there at a laptop with the customer. You already have all of their information, like their address, in front of you, and it would be very easy for you as preparers to turn the laptop around and verify that you have all of the customer's information entered correctly. So yes, Deba, thank you for this question in the chat. There is going to be information for you at the preparer stations about paper checks being phased out. Also, this isn't going to be a surprise to anyone because it is not just IRS refunds. It's also everything else from the federal government. So anyone receiving anything from Social Security would also have learned this, and they probably have a different prepaid debit card that they're using from the Social Security Administration. So the CSVs are the ones who set these up, but if you really want to learn how, you can come to a special training in the future on February 2nd or another one. All right. Some other things about CFR. Oh, I guess, just kidding. I don't have more things about CFR, but I will tell you that it's really quick to set them up. We are going to have handouts for you on CFR at your stations. Kate, great question. Mike, would you ever be able to unshare really quick and unhide the slide that has a little bit more info on CFR? Or maybe,
Sure.
I could probably unhide it if I wasn't also talking to you guys.
Is it this one?
That's the one. Kate, great question. Is there anything that would disqualify someone from getting a prepaid debit card? No. The cards say US Bank on them, as you can see on this little image here. US Bank is like the sponsor of Community Financial Resources, but it is not a US Bank account. If they have been had a US Bank account closed in the past, that does not make them ineligible for a CFR card. My frame of reference for this is kind of like a Visa gift card. It's just like a card that has a set amount on it, and when it is gone, it's gone, and there's no overdrafting. There is a $2 inactivity fee if they go, I believe, 90 days without using it. But otherwise, there aren't minimum balance fees, nothing like that. People can, there's a bunch of ATMs that are free with CFR cards. They can set up, there's a mobile app that they can set up. They can also go onto their CFR account and create a savings account as well. So they can save in their CFR account, but they can't do that in the clinic. That would be something they set up later. And they can also make their CFR card so that they can have other money direct deposited onto it. That's a step that they can do after the clinic, and something that will be on a handout that the CSVs give them. So they're reloadable. Are there
I think it's
any
worth
other questions?
mentioning
Oh, yeah, go
Sorry.
ahead, Mike.
So if a customer opens a CFR prepaid debit card
Hmm?
in the tax clinic, we give them a printout with the account number and the routing number. We don't give them the actual card in the clinic. That arrives in the mail. So,
7 to 10 business days later.
yep.
Yeah. So thank you, friends. Your takeaway, can they withdraw the cash from the card? Fatima, they can use ATMs with the card. They could also they could they could go into a US bank location to withdraw money, but US Bank can't help them with anything about the card because they are a sponsor of CFR. They're not like the people who do the customer service for it. So yeah, they can take the cash off of the card using an ATM or go to US Bank. Okay, so your takeaway is get the green form to the preparers, CSVs, sorry, as soon as possible. And eventually, we hope that you learn some high level things about the other the other financial services. In your manual, if you click that next slide, Mike. Yeah, the P&P tax manual, pages 20 and 21, there's some more information about the other financial services. And keep an eye out too for a couple of trainings during the regular season about the other financial services that we offer.
And your tax site managers will be happy to help you with any questions that come up while you're at the tax site.
Cool.
Moving on. Okay. So we are completely switching gears now from Prepare and Prosperous Financial Services to tax law. So buckle up. Here we go. We are going to do a deep dive into dependents. So we are on right now page 60 of the Prepare and Prosper manual. So please pay attention here. We are swapping the order. In the volunteer manual, filing status comes first before dependents because it happens first in the tax return in TaxSlayer software. But in this training, we're going to reverse that order and talk about dependents first before the filing status because it's the foundation to correctly determine the filing status.
People always comment about this, like, why is it backwards? So we just put it in the slides so you know.
Okay, so if you're following along in the manual, we're on pages 49 to 56, dependents. There are many tax benefits for claiming a dependent. You can find the list on page 60 of tax benefits for claiming a dependent and share what some of them are. Oh, wait, is that an exercise to do right now?
Skip it.
Okay, page 60 if you want to look later. Two paths to claiming a dependent. There's the qualifying child tests or the qualifying relative test. So two ways to claim someone as a dependent on the tax return. We always try the qualifying child test first. If the potential dependent does not pass any of the qualifying child tests, then we try the qualifying relative tests. Remember, always try qualifying child first and relative second. On the IRS intake sheet that the customers fill out, there is a section about dependents. You will verify all the customer answers in the dependent section. You don't just take their answers at face value. You have to verify all the responses with the customer. You'll ask questions in a different way. For example, did they live with you all year long? Instead of number of months lived in your home in 2025.
Can we take just a beat to hear from returners? Um, which things about these questions tend to throw off customers or tend to confuse customers?
I'll raise my hand if the volunteers don't.
Sometimes it's like, they might be typing, but we'd love to hear from you, Mike.
This last column here, issued IPPIN. Does anybody know what that is? That's the identity protection pin. The IRS issues that to certain customers.
Dimitri is saying people get confused about if they can claim their nephew or niece on their return.
Ah, that's a good one. And that's why this section on the paperwork doesn't say it doesn't say list your dependents. It says list the names below of everybody who lived with you last year. So not just your relatives, your roommates too. And that's because somebody doesn't necessarily have to be related to you to be your dependent. Should we continue or wait for more responses?
Yeah, let's move on.
Okay. So claiming a qualifying child, remember there are two tests, the qualifying child tests and the qualifying relative tests. We're talking about the qualifying child test, which we always start with. This is on page 62 of the manual. The general rules, the taxpayer cannot be claimed as a dependent by another person, and the dependent must meet the 6 tests to be a qualifying child. Only 6? It's really not that bad. The more you do it, the easier it gets. So these are the 6 qualifying child tests. We have relationship, age, residency, support, joint return, and qualifying for more than one person. Again, this is all in the manual. We're on page 62 right now. So the first one, taxpayer cannot be claimed as a dependent by another person. Number 2, the taxpayer cannot claim a married person who files a joint return. That means that if the dependent is married, they cannot be filing a joint tax return with their spouse.
Oh, Mike, do you mind going back and spending some more time describing what the tests are?
Sure.
You can go to
Um,
like pull up the manual if you want.
yeah, I was about to do that. That's a great idea. Okay. So, qualifying child. We're on page 62 of the manual. So these are the 6 tests. The 6 points I just mentioned in that chart: relationship, age, residency, support, joint return, and qualifying child for more than one person. So, number 1, relationship. In order to be a qualifying child, the child must be the taxpayer's son, daughter, stepchild, adopted child, foster child, brother, sister, half brother, half sister, stepbrother, stepsister, or a descendant of any of them. So it's a lot of people listed here, um, and not necessarily children. For example, siblings can be considered a qualifying child for the purpose of a dependent on a tax return, but a parent cannot. Cannot be a qualifying child. Spoiler alert, they can be a qualifying relative, which we'll be talking about after qualifying child. Age, number 2. At the end of the tax year, the child must be either A, under age 19 and younger than the taxpayer or spouse if married filing jointly, or B, under age 24 and a full-time student for at least 5 calendar months and younger than the taxpayer or spouse if married filing jointly, or C, any age if permanently and totally disabled. More details on page 48 of the manual. Number 3, residency. The child must have lived with the taxpayer for more than half of the year. Note, a child who lives in Canada or Mexico may be a qualifying relative. See page 63. So if the child doesn't live with the taxpayer but lives in Canada or Mexico, they might have a chance under the qualifying relative tests rather than the qualifying child tests. Support. The child must not have provided more than half of their own support for the year. If you're unsure, use the worksheet in publication 4012. That's an IRS publication. Tab C, pages C through 9. There's some more information down here about what support means in this context. Joint return. The child is not filing a joint return for the year unless the return is filed only as a claim for a refund of income tax withheld. That means usually you see this like if the child is an adult, for example, maybe, I'm just making this up here, maybe age 21 and a full-time student and married. If they're also filing a joint tax return with their spouse, then they cannot be claimed as a dependent on their parents' tax return unless they're filing that joint tax return only to have income taxes that were withheld refunded if they didn't actually owe those income taxes. And number six, qualifying child for more than one person. If the child meets the test to be a qualifying child of more than one person, the taxpayer must be the person entitled to claim the child as a qualifying child. More information on page 66, and I think we're about to talk about that in a future slide. Okay, there's a question in the chat. Can parents claim dependents born at the end of the year? Yes. Um, if the dependent is born anytime in 2025, they can be claimed as a dependent. I think maybe even January 1st, 2026, but not 100% sure on that one. So take that with a grain of salt. Okay. So this is where we left off on the slide. So claiming a qualifying relative. Okay, that's a qualifying child test. As remember from a few slides ago, there are two tests here, two paths to claiming a dependent, the qualifying child tests or the qualifying relative tests. We always try the qualifying child tests. That's what we just looked at. These 6 points are for the qualifying child tests. If the potential dependent does not qualify under qualifying child, so if they don't pass these 6 tests, then we move on to the qualifying relative tests. So we try the qualifying relative tests second. So here we go. Claiming a qualifying relative. We're on page 60 now of the manual. And this is when the potential dependent does not qualify as a qualifying child. We move on to the qualifying relative tests. So the points here, the taxpayer cannot be claimed as a dependent by another person. The taxpayer cannot claim a married person who files a joint return. The dependent must be a U.S. citizen or a resident of Canada or Mexico. We hinted at that under the qualifying child tests. And the person must meet the 4 tests to be a qualifying relative. These 4 tests, which we'll look at in more detail in a second, not a qualifying child, relationship, gross income, and support. So let's look at that in more detail now. Okay, tests to be a qualifying relative. So in this case, we already tried the qualifying child tests for this potential dependent, and for some reason, the person did not qualify as a qualifying child for one or more of these 6 tests. So we move on to qualifying relative. All 4 tests must be met. So number 1, not a qualifying child. The person cannot be the qualifying child of any taxpayer. This rule ensures that a child or young dependent can be claimed only once as either a qualifying child or a qualifying relative. An exception here, the person may still qualify as a dependent, a qualifying relative, for another taxpayer if the parent or other individual who could claim the child as a qualifying child is not required to file a tax return. So if this potential dependent could qualify as a qualifying child of someone else, such as their parent, but that person, like the parent, is not required to file a tax return and doesn't file a tax return, then another person could claim this potential dependent as a qualifying relative, even though this potential dependent is also the qualifying child of another person who's not filing a tax return. Relationship number 2. The person either A, must be related to the taxpayer in one of the ways listed under relatives who do not have to live with you, which I write down here, or B, must live with the taxpayer all year as a member of their household, except for temporary absences. So if it's one of these relatives, they do not have to live with the taxpayer. So a child, stepchild, foster child, or descendant of any of these, brother, sister, half-brother, half-sister, or son or daughter of any of them. Note that it's only son or daughter of the brother or sister, not the grandchildren of the brother or sister. Father, mother, or ancestor or sibling of any of them. This is how some people can claim their parents as their own dependents because the parents don't qualify as a qualifying child, that first set of tests, but do qualify as a qualifying relative. Stepbrother, stepsister, stepfather, stepmother, son-in-law, daughter-in-law, father-in-law, etc. Note here, a cousin can meet this relationship test only if they lived with the taxpayer all year as a member of the household because they are not listed under the section relatives who do not have to live with you. Gross income. The person's gross taxable income for the year must be less than $5,200. See footnote B if that person receives Social Security benefits, because that makes it a little more complex. And support. Taxpayer must provide more than half of the person's total support for the year. Exceptions for multiple support agreements, children of divorced or separated parents, and kidnapped children. Publication 4012 from the IRS, tab C, page C9 has a lot more information on these topics, as do these footnotes here. One interesting thing to note here is under relationship. This person either A must live, or sorry, A must be related, or B must live with the taxpayer all year as a member of the household, but doesn't have to be related. So this is an example where you will see occasionally, but although probably not too often, where someone can claim a roommate who's not related to them, for example, as a dependent on their tax return. It doesn't happen all that often, but sometimes it does. Okay, that was the qualifying relative test. So remember, two paths to claiming a dependent, either as a qualifying child, where we had the 6 tests, and if those don't work, because we always try qualifying child tests first, then we try the qualifying relative test, the 4 points we just looked at. The example of where the parents could be the dependent or even an unrelated person if they live with the taxpayer. Okay. We are on divorced or separated parents. So we are now on pages 64 and 65 of the manual. Custodial parent. So this is the parent with whom a child has spent the most nights, and a non-custodial parent is the parent with whom a child has spent fewer nights. Generally speaking, the custodial parents can claim the child because of the residency test, but custodial parents may authorize a non-custodial parent to claim some tax benefits. It's crucial to do a thorough interview in these situations. Here's an uncommon issue, but you probably will encounter it at least once. If multiple people meet the qualifying child tests and they disagree about who will claim the child. So this is when the child could be the qualifying child of more than one person, and those two people disagree about who is going to claim this child because only one person can claim the qualifying child, or the taxpayer is unsure if they can claim the child. The preparer should know the tiebreaker rules the IRS uses to determine who is entitled to claim the child. These don't always work out the way that the taxpayers want. So if only one person of the two people who could claim the child is the child's parent, so for example, one is the parent and one is the grandparent, and they all live together, that's an example we see fairly often, and the child is treated as the qualifying child of the parent. If both people are the child's parents, so this happens when the parents are not filing together, maybe because they're not married or they're doing married filing separate, then the custodial parent is treated as the qualifying child, or the child is the qualifying child of the custodial parent. If both people are the child's parents and the child lived with each parent the same amount of time during the year, 6 months and 6 months, then it's the parent with the higher AGI, adjusted gross income. Some ways you might see that play out at the tax site is only one of those parents is your customer and the other parent is not there. And you need to know what the adjusted gross income is of the other parent. Your tax site manager will help you navigate that situation. I think I've seen that like once or twice in 10 years. And if none are the child's parents, then it's the person with the highest AGI or adjusted gross income. There's more information on page 66. This doesn't happen all that often, so don't stress about it. And your tax site managers, as well as other volunteers who are more experienced, will be happy to help you navigate these situations. Okay, page 64 and 65. Why is dependency so important? There are many tax benefits to claiming a dependent, and there's a lot of money at stake, a lot. And when a customer incorrectly claims a dependent, If the rightful person has already claimed that dependent, the customer's return is going to be rejected by the IRS. Prepare and Prosper staff will contact the customer to help them resolve it, but it's going to delay any refunds, usually significantly. If the rightful person has not yet claimed the dependent when our customer's return is rejected, or sorry, when that rightful person's return is rejected, assuming that the wrongful or the not rightful person has already filed a tax return, the IRS will reach out to the customer and they will likely have to repay thousands of dollars of tax credits. So um, if the wrong person claims the dependent, the bottom line here is they're either going to get their tax return rejected and then the refunds are going to get delayed, or they're going to get refunds that they're not actually entitled to, credits paid out to them, and then have to pay them back, often with interest. Now we're on page 61 of the manual, filing as a dependent. You'll see on the IRS intake paperwork, the yellow paperwork, can anyone else claim you or your spouse on their tax return? To determine if a young adult is a dependent, ask more questions. Discuss the rules for being a dependent as part of the interview. And note that this part is bold because it's super important and this trips up even experienced volunteers sometimes. Someone must file as a dependent. So when someone files their own tax return, there's a question of if they can be claimed as a dependent by another person. So someone must file as a dependent if they can be claimed, even if no one is claiming them. Where we see this most commonly is with young adults, where their parents can claim them as a dependent on their tax return, but choose not to for whatever reason. The question isn't, is someone else claiming you as a dependent this year? The question is, can someone else claim you as a dependent, regardless of whether they do or not? So parents and guardians may be unsure if a child can still be claimed as a dependent. Take time to determine how much support the young adult provided for themselves or for themselves. There's more information on page 61, but the big takeaway here is that this question is not, is someone going to claim you as a dependent, but can they, whether they do or not? It's asking about possibility, not about what actually happens.
And also, I'm sure a good deal of like educating a young person that their parents probably could claim them and they probably need to file as a dependent. Curious to hear from any returners or from you, Mike, if you've come across this. I'm guessing, I mean, I didn't understand taxes when I was 22 and in college. I think if someone had told me that my parents were claiming me, I would have been outraged. Like, even though, for all intents and purposes, they provided more than half of my support and claimed me until I was done
Yeah,
with college.
I remember the year 2005. I was like 22 years old, and my parents provided like almost all my support except for like the last few months of the year I started supporting myself, and they chose not to claim me as a dependent, and I did not mark myself as a dependent on my own tax return. Sure didn't, and I got a whole bunch of credits paid out to me, which I shouldn't have done. But again, I didn't know when I was that young. Any other stories people want to share, like at the tax site or their own experiences? All right, let's keep moving. We're going to take a 10-minute break in a minute, but first, everyone should take a second to try to log into TaxSlayer Practice Lab. Holly, did you want me to show this or are you going to do this one?
I'm just going to put the link in the chat, and the link is in the basic tax training site. So the link to log into the practice lab is in the chat. And what do you need to enter immediately on this page? Who knows what the first password is before you enter your actual password? Thank you, Chris. Train Pro Web. Yes, I want everybody to, in all caps, type into the chat, Train Pro Web. Let's see you guys. I want everyone to put it in there. 42 people. There you go. Okay, we're getting it. If we were in person, I would make you repeat after me. It's great. Train Pro Web. You got it.
Train Pro Web. I'm typing it right now
Yep.
in this
Yep.
password. Enter password. All uppercase TRAINPROWEB.
Yes, thank you. So, for our returners who were not at session A last night, if you get to this page and you cannot figure out how to log in, you have to go to the bottom here, either forgot your password or forgot your username. And you guys are such good listeners. Thank you for putting that in the chat. You have to hit forgot your password or forgot your username and reset it. So you have our 10-minute break. We're going to come back at 7:20.
Okay, so we're going to do an activity called the dependency quiz. This is in your Prepare and Prosper manual, either the paper copy if you have it already or the electronic copy. Page 67. I'll also show the quiz on the screen in a moment. So what we're going to do is run through 8 situations and answer the questions about whether any given person qualifies as a dependent. So remember, when there are 2 paths to determine dependency, um, to see if a person is qualified to be a dependent of another person. Our first route is a qualifying child tests. We always try qualifying child tests first, and there are 6 tests that the potential dependent must pass. If they don't pass the qualifying child tests, then we move on to the qualifying relative tests. And remember, if they pass the qualifying child tests, all 6, then we don't even need to look at the qualifying relatives test. So remember, try qualifying child test first and qualifying relative test second. So let's look at page 67. We'll do the first one together, and then we'll give you some time to work on the rest on your own. So number 1, Juan is divorced, and his 20-year-old unmarried son, Robert, lived with him all year. Juan earned $40,000 and paid for their rent, food, and over half of his son's total support. Robert earned $10,000 and is not disabled or a full-time student. Can Juan, the father, claim Robert, the son, as a dependent? All right, let's find out. So which tests do we do first? The qualifying child tests. So in this case, Robert has to pass all 6 of these tests. So number 1, relationship. The child must be the taxpayer's son, daughter, stepchild, or a number of other relatives. He passes this first test because Robert is Juan's son. Let's keep moving because all 6 tests must be met. Number 2, age. At the end of the tax year, the child must be either under age 19 and younger than the taxpayer or spouse. I don't think he's under age 19. Nope, he's 20. Or under age 24 and a full-time student for at least 5 calendar months. He's not a full-time student. Or any age of permanently and totally disabled. Robert is not disabled, not a full-time student. So Robert does not pass the age portion of qualifying child. So we already know that Robert does not qualify to be Juan's qualifying child. So we're going to move on from the qualifying child tests to the qualifying relatives test, where there are 4 tests. Okay, number 1, not a qualifying child. The person, so in this case, Robert, the son, cannot be the qualifying child of any taxpayer. Um, we know that Robert is not a qualifying child of Juan because he failed the age test. We're going to assume for this example, he's not the qualifying child of anybody else.
He would fail the
Relationship.
age test for them too.
Oh, yeah. Okay, so relationship. The person either must be related to the taxpayer in one of the ways listed under relatives who do not have to live with you. We see child. Or must live with the taxpayer all year. We know that Robert lived with him all year, so we're fine there for relationship. Gross income. The person's gross taxable income, so Robert's income for the year must be less than $5,200. Robert earned $10,000. So Robert's income is too high to be a qualifying relative. So the answer to this question, can Juan claim Robert as a dependent? The answer is no, because Robert does not qualify as a qualifying child because of the age and not as a qualifying relative because of the income. So you can work independently on questions 2 through 8. And remember, try the qualifying child tests first, then the qualifying relatives test. Qualifying child tests are on page 62 and relatives on 63. I think we're going to give you 5 minutes, Holly.
Yeah.
So we'll check back in 5 minutes. Okay, it has been 5 minutes, so I'm going to put the answers on the screen. Were there any that were particularly tricky that we should review? Or they have questions on? Feel free to unmute yourself and ask or drop it in the chat. The answers are also in your manual on page 192. Okay, got Jilly and Hope in the chat here. Let's look really quick. Okay, number 6, Jilly and Hope divorced in 2019. Their daughter, Araceli, and son, Mateo, live with Hope. Jilly's AGI is 29,000 and Hope's AGI is 19,500. The divorce decree did not declare who could claim the children as dependents. Jilly consistently paid child support, which provided more than half of the cost of Araceli and Mateo's support. Who may claim Araceli and Mateo as qualifying children? The answer is Hope. And because of the qualifying child rules and the residency test. So we see here that, oh, I just lost it. Okay. Araceli and Mateo live with Hope. So as part of the qualifying child test, we have the residency. Child must have lived with a taxpayer for more than half of the year. So because the children live with Hope for more than half of the year and qualify as a qualifying child, we see that Hope gets to claim them as the qualifying children on her tax return. And we also have in the chat Yua and Shang. So Shang was unemployed, lived with his friend Yua all year. Yua earned 45,000 and paid for the rent, food, utilities, and all other living expenses. Can Yua claim Shang as a dependent? So we have to try the qualifying child test first. And Shang is going to fail immediately the relationship test for the qualifying child. So then we move on to the qualifying relative tests. And we know that Shang is not the qualifying child of any other taxpayer. Number 2, relationship. Shang is not related to Yua, but Shang lives with Yua all year as a member of Yua's household. Shang's income was less than $5,200. Unemployed implies no income. And Yua paid more than half that person's total support for the year. Paid for the rent, food, utilities, and all other living expenses for Shang. So that is how Shang can be Yua's dependent, even though they are not related to each other. Alrighty. So let's continue here.
To hear from our returners, how often do you encounter tricky dependent situations in your tax preparation experience. You can put it in the chat or share out loud. How often do strange scenarios come up with dependents? Diba.
It's pretty rare that I've dealt with that. I don't think I dealt with that at all. I've only done it 1 year, but I just wanted to make a comment about there was another reason that I noticed in the example with Hope and um Jilly, and that was it just said an exception for divorced parents. And so I
Mhm.
wonder what all does that supersede? Does that just supersede anything?
So it's, I think the page after the tests, Mike, that it
Okay.
gets into the special rules for divorced and separated parents. The custodial parent, Hope, can choose to give away some of the tax benefits to Jilly, and all four of these things have to be true in this box. This will come up, I think, very rarely, but if it does, it will be the non-custodial parent coming to you saying, my ex says that I can claim this kid, even though I'm not the custodial parent, and I either have the form 8332 or I have this other paperwork. So that's what it would take. Hope might come in saying, I have an agreement with my ex and I don't claim the child. But as the custodial parent, there are benefits that Hope cannot give away. And that's these ones kind of here. The following tax benefits remain with the custodial parent. So there's head of household, these other credits that just rely on the residency test, regardless of if the non custodial parent gets to claim them. Thanks for that question, Diba. And thanks for our other returners for sharing. Shannon only had that once in her first year. And oh, Jacob had a few, but it gets a lot of attention since it's so important with determining filing status for our customers. So for our returners, what advice do you have for newbies for like, oh no, what if I have one confusing or complicated dependent scenario? What advice do you have? Just ask someone else to help out. Thanks, Kate. Talk to a site manager. Ask for help. Okay, back to you, Mike.
Okay. That's what I would have said too. Ask the site manager for assistance or another volunteer who has more experience. I will say the vast majority of tax returns that you prepare are going to be pretty simple, determining who's a dependent and who's not. But you do need to know about these situations because they do come up, just not nearly as often as the straightforward ones. Okay, let's move on. We're going to meet our practice customer and her kids. So we have Tina Parker, who is a single mom with two children. Okay, this is where I go to Moodle
Yep,
Cloud, Holly.
you got
Okay,
it. Yep.
and I want both of
So,
these open.
yep. So in the basic tax training site, there is the area that Mike just had open where it talks about the practice customer materials for use during training. So we have, thanks, Mike, the two links. One is like the introduction to her, and it has the social security cards on the front and other documents. And then the other one is the link to her paperwork, starting with the CSV has screened the customer. Oh, the CSV's name was Holly. And so now you are in the preparation step with this customer, Tina. And we have all of her forms, starting with the IRS form.
Okay, so remember when we sign in to the practice lab, you don't have to do this now, you can watch, but remember, what do I type here? Train Pro Web, all uppercase. Yes, I see in the chat, thank you. Whoops, okay, I have to type it correctly, hang on. Train Pro Web, bam. Okay, so, okay, so Holly, I'm entering the information here. That's the goal.
Slides here
Okay.
first. So we have this customer who um, has given us her paperwork. And Mike, do you want to talk about how the customer's going to fill out the dependent information, and then preparers are responsible for the shaded section.
Sure. Okay. So on this IRS intake paperwork, this lovely 6 or how many pages now it is document from the IRS, um, we have a lot of information that the customer fills out. So like all this information right here that's not shaded, the taxpayer, the customer fills out. And the shaded sections are going to be filled out by the tax preparer. So that's this section right here, as well as um, this section right here to be completed by a certified volunteer, um, income to be included.
Yeah, and we'll get into that page tomorrow.
Oh, okay.
So we're just talking
So,
about the dependent shaded section.
yep. So here remember we saw this briefly in one of our slides. This isn't the question, who are your dependents? The question is who's living with you, regardless of whether they're dependent or not. That's how we can use our qualifying child and qualifying relative tests to figure out if any of these people can be considered dependent or not.
So in the other link with Tina's stuff that had her like introduction, she tells you in the interview that she has 2 kids who lived with her all year. And we're only going to talk about her kids tonight.
Okay.
And
So,
my
sorry.
question to everyone looking at the yellow sheet, if you would zoom in a little bit, Mike, on the dependent information that Tina gave, is if assuming that we've already done the interview, in the interview, is there any like other information you'd like to ask Tina about her children before we start putting them in? It usually comes up that someone will say, do we need to double check that Terrence is a US citizen? Because there is an X there instead of a Y. And I will just say that as the person who was pretend filling out Tina's paperwork, that was my mistake, which means it's a mistake that Tina or any customer could make as well if you're just kind of checking, Xing. It's still a good question. And is Terrence a US citizen? And she'll say, yeah, oh yes, sorry, he lived with me all year long. Any other things that you would want to clarify about Tina's children? Then, Mike, do you want to flip back to the slides to show, is no one else claiming them? Yeah, good question, Kate. Yeah, good questions, both of you. In the interview, Tina would say, "Oh, the father's not in the picture. I support the kids, and they live with me all year long." So she's a single parent in all meanings of the word. And so then, as the preparer, the slides show how you would fill out the shaded section.
The slides in the presentation.
You got it.
Oh, okay. Yeah, I just confused myself for a second. Okay.
You're doing great. It's a lot of flipping.
Yeah, okay. So the section that we're going to fill out, which is right here next to what the customer fills out. So you look at your customer's IRS intake sheet, and for Tina Parker's 2 children, mark yes, no, or NA for the shaded section. So the qualifying child or relative of any other person, we're going to mark no because through the interview we learned that they're not qualifying children or relatives of other people. This person provided more than 50% of their own support. We learned in the interview that Tina is providing more than 50% of their support. Person had less than $5,200 of income. We learned that in the interview, that the children each had less than 5,200 of income. So we mark yes. The taxpayer provided more than 50% of support for this person. So the inverse of this, more or less, but keep in mind sometimes there can be other people providing support. So the taxpayer, specifically Tina, provided more than 50% of the support for this person, yes. And taxpayer Tina paid more than half the cost of maintaining the home for this person, yes. We learned all of these, the answers to all these questions through our interview. with Tina, in which case we used these responses here as a guide, but not the only source of information. We also talked about these situations with Tina in the interview.
Cool. So then before we go into the practice lab, would you just hit on those last couple slides about TaxSlayer, Mike?
Sure. Okay, so you will have two TaxSlayer accounts. You have the practice lab account. That's the one we just looked at, where you have to enter Train Pro Web first, and then you create your own username and password by registering.
And this is mostly just for training purposes, and you're going to use it to pass the certification test.
Mhm. And then we have the TaxSlayer Pro online account, which you log into from a different link, and that's what you'll use when you're at the tax site. So this is Practice Lab is just for practicing, getting used to the software and how it all works. TaxSlayer Pro online account, this is the real deal when you're preparing real tax returns for real customers at the tax site. And
Yeah, the Volunteer Resources Department will email you a link, like Mike said, very soon before the tax season starts so that you can access it at tax clinics.
and if you forget your logins, the tax site managers can help you for the real TaxSlayer Pro online account. And you can also do a password reset if you need it. TaxSlayer tips use caps lock. So every time you're working in TaxSlayer, so in the tax software, your caps lock is on. So that means you're typing names like Tina, what's her last name? Can't remember.
Parker.
Parker. You're typing Tina Parker in all uppercase letters with the caps lock on. You're typing Tina's address with all uppercase with the caps lock on. Using the caps lock eliminates capitalization errors and makes it easier for reviewers to look over the tax return. Optional, use round numbers. If it's easier for you to use round numbers, do it. Or TaxSlayer will round for you. Pretty much everything in a tax return, money-wise, is rounded to the nearest dollar. So if somebody earned $5,300.60, you can enter $5,300.60 and TaxSlayer will round it to $5,301. I think. Yeah, nearest dollar. Or you can just enter 5,301. Either way, everything is rounded to the nearest dollars. We don't work with cents in tax returns at all. Change the year. Use 2024 until Minnesota software comes out. So we're talking about the practice lab specifically here. You'll see here when you log into the practice lab after entering Train Pro Web and then your username and password that you created and registered, you can change the year right here. Looks like 2025 is out. Of course it is. I already did my certification tests.
For federal, it's out,
Oh, okay.
but not Minnesota yet.
But not Minnesota. So they'll be using 2024 for practicing.
Yeah.
What about for the certification tests themselves, since there's no state questions on it anyway?
For the certification test, they'll use 2025.
Okay, so 2025 when you're ready to do your certification tests, 2024 when you're practicing before you do your certification tests. Thank you. Carry forward data available for returning customers. So this is when you're working with taxpayers at the tax site. We have a lot of returning customers. So if they received services from Prepare and Prosper last year or the year before,
if they signed the global carry forward consent on the back of the IRS intake sheet, which is not required, it's an optional one.
yeah. So if they gave us consent on this page here to carry forward their data, then that makes it simpler. And most of them do give consent. So then when you enter their social security number and start their tax return, TaxSlayer will often prompt you to pull forward data from a previous year, such as a social security number, their name, their dependents, maybe their W-2s. I don't remember exactly. And so that it streamlines the tax preparation with less data entry, but you have to watch closely because tax situations change from year to year. Just because someone was a dependent last year doesn't mean they're a dependent this year. Just because someone worked somewhere last year doesn't mean they worked there this year, etc. But it definitely saves time. That's why if you're ever doing multiple tax years, tax returns for the same customer, like 2022, 2023, 2024, 2025, you almost always start with the oldest one because then the data can be pulled forward from year to year, but it can't be pulled backward. Okay, the TaxSlayer navigation menu. Use the left-hand navigation menu to move through the return efficiently. The menu may collapse to save screen space. Hover over the icons on the left side of the screen and use the pin icon to keep the left menu visible. We have to actually go, should I go into a tax return and show them this right now?
Yeah. Oh, do you actually want to demonstrate what it looks like to start the return and just actually start the return for Tina?
Sure. Okay.
In
So
2024.
I'm going to change to tax year 2024 right up here. And I'm going to start a new 2024 tax return for Tina. So I have here her information. So I'm going to enter Tina's social security number from the source document, which is most often the social security card itself, or a copy of the social security card, but it might also be some other documents. So in this case, we have, and I have to remember this, 123004566. 12300 is already filled in because we're in the practice lab, and I already forgot. 456.
We'll have to tab over, right?
123, yep, or click. Okay, I'm gonna leave this on basic, no profile, create a return without a tax profile. Start the return.
So folks, this is where if you want to just watch, that's fine. If you want to follow along, either flip back and forth or listen to what Mike is entering, you can do it yourself along with him.
So what we were just looking at, whoops, was this icon right here and the left navigation menu. When I put my cursor or pointer over here, you'll see this navigation menu appears, and when I move it off, it disappears, which is really annoying, I find. And so I always go over here and click the push pin, and now this navigation menu stays open. As you get more experience, you're going to learn how convenient that is when you need to jump around in the tax return. You don't have this menu opening and closing every time you move your pointer. Okay, so that's what this push pin does. It's your best friend in TaxSlayer. Okay, so like Holly just said, you can just watch, or if you have multiple screens, you can follow along in the TaxSlayer practice lab if you want. Remember, this training is recorded, so you can always watch it later for another overview of how to do this. So we're going to start a new tax return for Tina Parker, which I just did by entering her social security number. We're going to enter her basic information, choose the filing status, head of household, and enter her two dependents. So I entered her social security number, and now it's asking me about the filing status. Our instructions say we're going to select head of household. So I select head of household and I click continue. Okay, Tina Smith. I want to enter, like I just mentioned, directly from the source document, or sorry, Parker. Tina Smith is our senator. Okay, Tina. Oh, what am I doing wrong here? I don't have my caps lock on. Tina Parker. I don't think there's a middle initial. Nope, no middle initial, so I just leave this blank. No suffix, such as junior, senior, or all these numbers. Social security number I already entered, so it's right here. Date of birth. I don't have it here, but I find it right here on the first page of the IRS intake paperwork. Tina's date of birth is February 2nd, 1989. That was my dog's birthday. Or was he born in 87? I don't remember. But it was February 2nd. He's long gone, but he was a good dog. Okay, occupation. Oops. Occupation, we're going to find right around here somewhere.
Next to her birthday.
Ah, sales. Okay. And okay, we learned from our interview that she cannot be claimed as a dependent on someone else's tax return. She's not a full-time student, I don't think.
Nope.
Okay. She's not blind, not deceased. We'd find that here. We know she's not deceased because she came to the tax clinic herself. Should I just skip these or are we gonna go over, should I go
Well,
over
you
them
can
right
just
now?
mention that these are uncommon. The boxes here are uncommon, but good to pay attention, especially to whether or not they were a full-time student.
Yeah. Fun fact, in 10 years of doing this, I've never ever seen anybody contribute $3 to the presidential election campaign fund, and I've looked at a lot of tax returns.
We just generally also skip it as a rule.
Yep. So served in a combat zone during the current tax year, affected by a natural disaster during the current tax year, receive, sold, or dispose of a digital asset or financial interest in a digital asset in the current tax year. Think cryptocurrency like Bitcoin. I think that makes, if they did buy or sell Bitcoin, I think that makes their tax return out of scope. But you'll probably cover that in a future training. Um, Taxpayer prefers to receive written communication from the IRS in a language other than English. Taxpayer prefers to receive written communication from the IRS in an accessible format. Okay, we're going to do the address next, which we'll find right here, 2705 DuPont Avenue South. Apartment. Watch very closely for apartment numbers because there often are apartment numbers. And if we miss the apartment number, a lot of times the mail doesn't make it there. So apartment 10. We don't type the word apartment or unit or even the number sign. We just do 10. Even if the address is technically like unit or number, like I just showed you, we're still just going to put the number in. Or if it's like B2, you would just type B2, for example. But don't use a word or a number sign. Zip code, we got 55408. Now watch what happens when I click outside of here. The city's filled in automatically. Now, different reviewers and tax site managers have different opinions on this. Holly, what do you think? Should we change this Minneapolis to all caps or leave it as it is?
I don't think we need to be so fiddly that we're erasing the city name and retyping in all caps. But it can be useful, like if someone lives in St. Louis Park, their zip code will still come up as Minneapolis. In that case, it is nice to delete Minneapolis and type in what their actual city is. Because then if we are pulling reports of what cities our customers are coming from, it just makes it easier.
Mhm. Makes sense. Okay, so in this case, we're going to leave Minneapolis in lowercase because we didn't type it ourselves. State is Minnesota. The resident state as of 12/31/2024 is Minnesota. Daytime telephone number is 612-555-1212. Notice that I didn't type the dashes or the parentheses. I just typed the numbers and TaxSlayer filled in the parentheses and the dash um, on its own. We don't have a secondary telephone number or let's see, primary client emailed. We got that filled in. Tina89@google.org. Okay, so we'll click continue. No, yikes. Um, okay, the county in this case, I believe is Hennepin. Of course, it's Hennepin. Do we ask for that somewhere?
On the gray sheet, and in the past it was
Ah,
a fill in the blank, but people thought we were asking what country they lived in. So this year we made it a multiple choice of the Twin Cities counties, which ones. Yeah, thanks,
okay.
Jacob, for confirming that that happened. The people would just say USA because they thought it said country.
So in this case, Hennepin, watch the spelling. Um, okay, so new for 2024. Remember, we're using 2024 because we're practicing right now. The renter's credit is now, we don't need to do this part, right? I can just skip over this.
Yep.
Okay.
There's some glitches in the practice lab that make it not exactly the same as Pro Online.
Okay. Um, so any dependents or qualifying persons to claim on the return. Okay.
Yes.
Yes. And we're going to enter them right now. So remember we have, through our interview, we learned that the two people listed living in the house are both dependents. So we're going to enter them. Terrence Phillipson. So Terrence, I'm changing the last name here. Phillipson. I'm going to double check the spelling.
So
Phillipson.
that's a good thing to note that any dependent, the last name of the taxpayer will auto-populate. So super common for dependents to have different last names. So note that and change it if needed. Very important.
Okay. Terrence's birthday, 2/10/08. We got from the IRS paperwork, 2/10/08. Social Security number, I'll take directly from the source, 444-555-666. 444-555-666. Okay. U.S. citizen, yes. Relationship,
Really
son.
important here to mark yes, unless you know for sure, unless you want to do the substantial presence test to figure out if maybe they did not live in the US. So it's not asking about citizenship, it's saying did they live here last year? So you have to say yes unless that was not the case. Otherwise, the person will not be allowed to claim a lot of credits. So there's more information on that in the residency section of the tax manual.
Notice here the response for the relationship on this intake paperwork is child, but child is not an option for relationship. We have to do son or daughter. Number of months the person lived with you, we got 12. And okay, over age 18, nope, not disabled. This is the dependent, so we're not going to check this. We are not going to not claim this dependent for earned income credit purposes. The dependent's not married. The dependent did not make more than 5,050 in income, and this dependent does not qualify for multiple support declaration. Okay, if I click continue, it's going to take me to the next section of the tax return, but I want to enter another dependent, so I'm going to click save and enter another. If you do click continue, you can always go back. This will just save you a click if you click save and enter another. Okay, next we've got Tasha
Tasha,
Parker. Tasha Parker. Date of birth is
Cinco de Mayo.
5/17, yeah. 5/5/2017. 888-99-1111. 888-99-1111. So we'll do yes, daughter, 12, and none of these.
Really quick, if you are
Oh,
ever
sorry.
struggling to enter the relationship, sometimes TaxSlayer has a glitch where it won't let you choose a relationship. You need to just go back out of the page. And when you come back to the page, choose the relationship first. And then that glitch will go away. Just something to remember if you're ever frustrated with the practice lab.
Notice here that my navigation menu collapsed on its own. I don't know why, but I'm just going to click the push pin again and hopefully it'll stay open.
Thank you so much for demonstrating, Mike. Friends, this concludes the portion that we were going to do in TaxSlayer tonight. We just wanted to show you how to start a return and enter dependents. And tomorrow night, we will start entering Tina's income statements.
Okay, let's talk about filing status. We are on page 54 of the manual. So the filing status options, there are single, married filing jointly, married filing separately, head of household, and qualifying surviving spouse. We just saw for Tina that Tina was head of household. So the marital status is not the only factor in determining filing status. Other considerations are dependents, supporting others, recently lost a spouse. On the IRS intake paperwork, you'll see there are some important questions here. As of December 31st, what was your marital status? Never married, married, divorced, legally separated but not divorced, and a few other questions about being married or widowed. Marital status on the IRS intake sheet is not always the same as filing status. So we have to use everything we learn along with the documentation here that the customers fill out. Marriage, page 55. To file a joint tax return, taxpayers need to be legally married on December 31st, 2025. Married taxpayers must file as married filing jointly or married filing separate. Not recognized in Minnesota. Cultural marriage or common law marriage without a license is not recognized in Minnesota. If filing jointly, both spouses must be present at the appointment before the return is signed. You'll see this happen occasionally where the spouses are filing jointly, but only one of them is at the tax site. This would be a good opportunity to get your tax site manager involved to have that conversation with the customer about what the plan is, because the spouse needs to sign that tax return as well before it can be filed. Okay. Married filing separately. Married taxpayers may choose to file separately, meaning each one files their own tax return. So two tax returns, one for each married person, rather than a joint tax return, one tax return for both of them together. This is the least advantageous filing status. The tax rate is generally higher than married filing jointly. It's not eligible for many credits. So always check with your site manager if customers want to do married filing separately. And that's because a lot of times customers don't realize what the implications of married filing separately are. And there are some situations that we can get around, some specific situations that they probably don't realize, and still have them file together. If the spouse's social security number is not available, the return must be paper filed. So we can still prepare the tax return, but instead of electronically transmitting it, we print paper copies, and the customer takes the paper copies to the post office and mails them. Head of household. So this is one of the filing statuses that we saw. This is the one that Tina Parker had. Someone who claims head of household has to have all three qualifications here. So the marital status, unmarried, meaning single, or considered unmarried, which we're going to look at in a moment. This is someone who technically is still married, but is considered unmarried under tax law. Number two, main household supporter. That means they pay more than 1/2 of the cost of the household. And number three, with a qualifying person. So someone who lived with them more than half of the year, but rules are based on marital status. So qualifying person, remember, qualifying child or qualifying relative. Head of household rules if the taxpayer is unmarried or single. Is this the one where you suggested I go to the manual, Holly?
Yeah, this is just a screenshot of the manual at this
Okay,
point.
page 56. We're gonna jump to that. Doop-a-doop-a-doo. Where is it? Okay, the head of household, if the taxpayer is unmarried. So unmarried taxpayers, single, divorced, legally separated at the end of the tax year, must meet these two qualifications to claim head of household filing status. You can also see the worksheet in publication 4012, page B16. Taxpayer paid more than half the cost of keeping up the home for the year. Taxpayer has a qualifying person, which must be one of the following: a qualifying child who lived in the taxpayer's home for more than half of the year. Note, the custodial parent retains head of household status even if the non-custodial parent claims the child under the special rule for divorced or separated parents. Or a qualifying relative who is the taxpayer's parent. Parent does not have to live with the taxpayer, but that parent must live in the US, Mexico, or Canada and must have an ITIN or social security number. Taxpayer must pay more than half of the cost of keeping up that parent's home. Or a qualifying relative who lived in the taxpayer's home for more than half of the year, who is
Related to them.
any one of these relatives, but not a non-relative roommate. So what the important point here is what we saw before when we talked about dependents. We did the qualifying child tests, and if the qualifying child test didn't pass, we moved on to the qualifying relative tests. Here we see the same concepts, the qualifying child or qualifying relatives with even more requirements added on top.
Not necessarily, I would say, Mike. I would just say it excludes the opportunity to claim a roommate.
Yeah, okay. That's a fair way of saying it. So that was what was on that slide. Okay. So Head of household rules if taxpayer is considered unmarried. Taxpayers who are separated from their spouse may qualify for head of household status even if they're not divorced or legally separated. They may be technically married but considered unmarried for tax purposes. To qualify for head of household, they must meet all of the following conditions.
And this is stricter. This is more narrow than the other one if they're just single or unmarried.
So, considered unmarried, the taxpayer lived apart from their spouse for all of the last 6 months of the year, so July through December of that tax year. Temporary absences still count as living together, for example, military deployment and incarceration, and will file a separate return from their spouse, and paid more than half the cost of keeping up the home for the year. There's a worksheet in publication 4012 that you can look at for more information on that. And has the main home for more than half of the year for their child, stepchild, or foster child. Note, a grandchild does not meet this test if the taxpayer is considered unmarried.
Only if they are actually unmarried or single. Does a grandparent meet these tests with a
Yeah.
grandchild?
Remember, we're talking about considered unmarried here, not actually unmarried. And the taxpayer can claim the child as a dependent. Note, the custodial parent retains head of household status, even if the non-custodial parent claims the child.
So I feel like this is pretty straightforward. It's pretty narrow what situations this applies to. It's first they have to be actually considered unmarried, which means they didn't live together for all this last 6 months of the year and they're going to file separate. And then they have to have it's either a child, stepchild, or foster child that they have in their home for more than half the year and they pay more than half the cost of keeping that home. So it's very narrow, basically a single parent for this second set of considered unmarried rules.
We've been throwing a lot of information at you. I just want
I
to
don't
take a
think that
look.
this is that complicated, though, Mike.
No, this part isn't. But I just want to say that you don't have to be the expert on everything. We have lots of resources to help you, and a lot of it you learn as you go. So, you know, um, the tax site managers and reviewers and more experienced volunteers will be happy to help you when you have questions. Okay, filing status changes. Okay, filing status is the first data entry in tax layer. Important to determine filing status. It is important to determine the filing status before starting the return. If the filing status is changed, the state returns are deleted. So reminder, we do both the federal tax return and the state tax return, the Minnesota tax return. So if you select the filing status and enter all the information for the federal and state tax return, and then learn that you need to change the filing status, that's fine for the federal tax return, but everything in the state tax return gets deleted when you change the filing status and then needs to be re-entered. So keep that in mind when you're working with the filing status. Take your time and use your resources and do your best to choose the correct filing status. All information entered for the Minnesota M1 PR return will be deleted and needed to be re-entered, as well as the Minnesota M1 return. The M1 is the Minnesota state tax return, and M1 PR is a separate tax return for property owners, people who own their home, who can get a refund of some of the property taxes. Okay. So we have one more activity, filing status quiz. This is on page 57. Oh, these are the answers. So let's look at this together. We'll take a similar approach to what we did with the last quiz. And I think I have it on this document here. Okay, hang on a second. Nope, it's a different document. One second. Here we go. Okay. I don't need this one anymore.
Oh, you made a little separate files.
Yeah, it's just easier to keep track of it that way. Okay. So similar approach. We'll do the first one together, and then you can work on the others on your own. So number one, Carlos is single. He supported his parents and paid more than half the cost of keeping up their home in Mexico for the past 2 years. Carlos's parents meet the test to be his dependents. What filing status should Carlos use? So we go here to page 54 of our manual, and we have the filing status. And okay, so for the filing status single, we ask ourselves, does the taxpayer have no spouse and no dependents? We already know that Carlos has two dependents. His parents meet the test to be his dependents. So not single. Married filing jointly. Are the taxpayers married and filing together? Carlos is single, so not married filing jointly. Married filing separately. Is the taxpayer or spouse married and unable or unwilling to file jointly? Nope. Carlos is single. Head of household. Is the taxpayer a single parent, or do they support a relative without the help of a spouse? Let's investigate this. Marital status, unmarried. So this requirements and notes. The marital status, unmarried. So never married or divorced or legally separated. So yes, Carlos is unmarried. Or married but lived apart. Not applicable because Carlos is unmarried. Standard deduction to the 23,625. That's FYI. If children or dependents, check page 56 for head of household rules. Okay. Page 56. Head of household rules of taxpayer is unmarried. Remember, we're looking at head of household rules of taxpayer is unmarried, not considered unmarried. Carlos really is unmarried. So let's evaluate Carlos's parents in relation to him and his filing status. So the taxpayer paid more than half the cost of keeping up the home for the year. I believe that was a yes. Yes, Carlos paid more than half the cost of keeping up his parents' home in Mexico. Taxpayer has a qualifying person, which must be one of the following. A qualifying child, no. A qualifying relative, who is the taxpayer's parent, yes. The parent doesn't have to live with the taxpayer. We know that the parents live in Mexico. The parent must live in the US, Mexico, or Canada. That's looking good. And so we're good. So Carlos should do the head of household status. The other one listed here is the qualifying surviving spouse, and that's when the taxpayer's spouse dies in 2023 or in 2024. So that's not applicable here. So the answer here is head of household because Carlos has the qualifying persons, two qualifying persons who are his parents. They don't live with him, but they do live in Mexico. So why don't you take some time? We'll do 5 minutes to look at the other situations, and then we'll see what questions you have. Alrighty, let's look at the answers now. Okay. The answers are also on page 192 of your manual. So here are the answers to the questions that you just looked at. Are there any situations that people want to revisit or go into detail on? Haven't heard anything yet or seen anything yet.
Mike, you could always just do number 2 if we're not
Okay.
hearing anything from people.
Let's do it. Okay. Number 2. Scott and Kathy separated in April 2025 and lived apart for the rest of the year. They are not divorced or legally separated. Their 15-year-old daughter, Bethany, lived with Scott all year. Scott and Kathy will not file a joint tax return. Scott paid more than half of the cost of keeping up the home. Scott claims Bethany as a dependent because he is the custodial parent. Both Scott and Kathy are legally required to file tax returns. Can Scott claim head of household filing status? And the answer is yes. Scott can claim head of household filing status. So remember, head of household is a taxpayer single parent, or do they support a relative without the help of a spouse? These are the questions we're asking ourselves to narrow down. The marital status would be unmarried or married but lived apart the last 6 months of the year. Our keywords right here, last 6 months of the year. Let's look at not this page,
One more
but
down.
this page. Head of household rules the taxpayer is considered unmarried. So the taxpayer, in this case Scott, lived apart from their spouse for all of the last 6 months of the year. We saw that in the question. Will file a separate tax return from the spouse. We saw that in question number 2 as well. Paid more than half the cost of keeping up the home for the year. We saw that in the question. Has the main home for more than half of the year and can claim the child as a dependent. So the answer to this first question, number 2, can Scott claim head of household filing status? Yes, because he's considered unmarried. He meets the requirements for considered unmarried. And what filing status is Kathy required to use? The answer is married filing separately, because Scott's doing the head of household. Alrighty. Okay, an uncommon situation, the injured spouse allocation. This is on page 58. This is an option to avoid disadvantageous married filing separately status when one spouse owes past due debt. So this is a situation, it does come up occasionally, where the spouses are married and they would otherwise file jointly, except that one of them has past due debt to the IRS. And they don't want the entire refund to be intercepted by the IRS to pay down that debt. Form 8379, the injured spouse allocation, allows the injured spouse, the one who doesn't owe the debt, to receive their portion of the federal refund. So their portion of the refund gets paid out, and the spouse who owes the debt, their portion of the refund does not get paid out. The IRS recaptures it to pay down that past due debt. It is important to know that if somebody does owe a past due debt to the IRS, any refund that is calculated due on the tax return will be intercepted by the IRS and used to pay down that debt.